BSAA, whatever that is.
That's Higher Education Student Assistance of New Jersey.
Okay, good. And Business Development Manager at ELM Resources. For the past 15 years, he's worked at Sallie Mae in various management positions, including Regional Vice President of the USA Fund Services Mid-Atlantic Division, and is currently Director of Business Development, working with schools in New Jersey, New York, and Puerto Rico. And is an active, there's a bunch of acronyms.
There's a bunch of other things.
Member, and is currently chair of another acronym member development committee, co-chair of development for another acronym. Like these acronyms are like 7 characters. You know what I'm saying? All right. And he's a graduate of Seton Hall University and resides in Cedar Grove with his wife and 2 daughters. I brought him in because you guys suck at personal finance. I see it. So you need to listen to some of what he has to say today. He's going to talk to you about credit and what it means, how and how to work with it. All right. So without further ado, it's Mr. Ed Gonzales.
All right. Thank you. Thank you very much for the introduction. It's a pleasure to be here. Thanks for your time. Hopefully you'll learn a couple of things along the way. It's a small group, so if you have any question at any point in time, please don't be shy. Raise your hand. I'm not going to call on you to embarrass you. I'll just clarify some of your concerns, okay? It's about a 50-minute presentation, all right? So just bear with me if you think some of the stuff is not interesting. It will become interesting as we go through the presentation, and we'll try to tie it all in. So the focus of what we're going to discuss, credit management, understanding what credit means. Many of you who are here on campus may have some understanding of what credit means, may have a credit card, may know how credit operates. We're going to just clarify all that for you. Many of you don't, right? So many of you are going to, very soon in the next couple of years, find yourselves with a credit card, maybe a loan of some kind. All right, so we'll go over ways to manage that process, and we'll also show you what a credit report looks like and show you how to gain access to your credit report for free. And the focus, and what I want you to remember is that anytime that someone discusses any type of managing your credit or trying to improve your credit, your score, we'll go over a lot of definitions, you're always trying to set yourself up to be in the best possible situation for the next type of credit that you ask for. So what do I mean by that? So let's say you have one credit card in your wallet. You're behaving a certain way with that credit card. You're using it for purchases. You're making payments, hopefully on time, every month on a consistent basis for a period of time that is reflecting positively on your credit report. But you know in the back of your mind, in a couple of years, you're going to have to go out and ask for some kind of a loan. Let's say a car loan, a student loan, again, way in the future, a mortgage, any other type of credit. So you want your credit report to look as good as possible for that next application, for the next review. Let's say you have a Discover credit card in your pocket, but you want a Capital One credit card as well because they have some fancy reward program. So you want to behave 100% responsible with your Discover credit card so you can then get the best possible interest rate offer from Capital One and a higher balance as well, right? So these are all things that no matter how old you are, no matter where you are in your lifespan of credit utilization, these are all things that all consumers should try to manage, is making yourself as attractive as possible to the next bank or credit agency. All right, so just keep that in the back of your mind because I'll keep circling back to that theory. So what you see in front of you are some credit basics in terms of definitions, credit history, and credit score. So for those of you who are unclear as to what credit is, it's an extension. You're going to ask to receive a good or a service to pay at a later date, right? So credit card, the loan, you're all paying that back over time. That's credit. Credit history is how you behave with those extensions of credit over the time period, whether it's 12 months, 24 months, 36 months, or 6 months if it's a brand new extension of credit. So that is the entire summary of all of your transactions and your payments, all of your behavior patterns from day one. So for any of you who may have a credit card or two, any of those transactions that you use those credit cards for the first time that you ever received the card, that's always going to be in your file. As you mature, as you grow as an adult, as you develop other types of accounts, as you use those cards, those accounts for more transactions, your credit file, your credit history is going to get longer and thicker in terms of a file, right? So maybe now you have a file that is this thick, but by the time that you're 50 years old, your file will be this thick, right? With transactions, activity, and payments, right? So that is what is considered your credit history, all of your credit history. The score, the credit score, which we know as a FICO score, and I'll get to that in a minute. Your credit score is a numeric representation of your history, all right? So each one of these two examples, you know, the thin file or the thick file, will have a corresponding score, a credit score. Your score is derived from a company called the Fair Isaacs Corporation, which manages or reports on and collects about 95% of all the transactions that go on in the industry. So most banks, most credit card companies, most lending institutions report activity into three major credit bureaus, TransUnion, Equifax, and Experian. And there they use this FICO method to derive a score, a number, that represents how attractive you are or what type of a risk you are as a consumer of credit. That range of scores is from 300 to 850. 300 being, you know, extremely low, 850 being perfect. The 850 is kind of like a ghost number, if you will, because many consumers in our lifetime may see an 850 twice or maybe 3 times in our entire consumer lifetime. So when we first develop some low balances paid on time for 12, 24, 36 months, we may have a very, very high score, very close to 850. As you tack on more debt, as you tack on another loan, as you tack on more payments, higher monthly payments, you know, it'll be harder to achieve that 850. And then if you fast forward to later on in life, maybe some of your grandparents, maybe they have no more debts, maybe they have made payments on time to all of their accounts for, you know, 30 or 40 years, they might be close to that 850 again. In between, what you'll find is a range. So from that first day and last day of your credit consumer life cycle, you're going to fall within a lot of different ranges. So currently, the guidance that we give is based on recommendations from the FICO, from Fair Isaacs, and these are FICO bands in which lenders and credit card companies will rate you based on your number. Okay? So you see that the bands start out from exceptional at the 800 plus number, all the way down to poor, or very poor, or impossibly poor, if it's less than 580, right? So remember the range 300 to 850, but anything less than 580 is currently defined as poor. What that means is that you will find it very hard to gain approval on credit card applications and on other types of loans in that band. But as you go up higher with elevated scores, you'll see that more credit will be available to you, maybe at lower interest rates, maybe higher thresholds. Maybe the credit card company that today, you know, tells you that since you're at 580, we'll approve you, but we're only going to approve you for a $250 balance or $250 maximum. As you get higher in your payment history and more responsible, and your FICO score goes up, maybe your next credit card will say, okay, well, you know, you've demonstrated 2 or 3 years of responsible transactions, so we'll give you a credit card maybe with a lower interest rate and a higher maximum balance of maybe $1,500 or $2,000, okay? So that's what lending institutions are looking for. The higher the FICO score, the better the offer, the lower the interest rate, the higher the credit card balances would be, maybe the more benefits you would get as far as 0% threshold timelines, etc. What's important to note here is that the average FICO score, this is showing you that in 2017 it was 700. We have updated information now, so as of 2018, that average number is 704. So the average FICO score of all consumers in the U.S. based on 2018 data is now at 704. So that number has been going up substantially over the past 8 or 9 years. We have a question in the back, yes?
Question. I'm just kind of hypothesizing. I'm thinking maybe some of the people here have not had any credit yet, or haven't applied for any credit cards or what have you. I wonder what would their score be along that spectrum, having had no credit experience just yet.
Okay, so that's a good question. So the other thing that you would see on a credit report is a 0 or just no score, right? So the range, we know it to be 300 to 850 if you have some type of transactions. If you have no transactions and you go out to pull your credit report and you have no credit at all whatsoever, you may see a 0 or you may see just a no score, the actual term no score. So that is indicative of someone who wouldn't have any type of credit on file with any of the 3 reporting agencies or with any type of consumer retail association or credit card or bank. Okay, so it would be a 0 or it would be a no score. So in those cases, the 0 is not a penalty. The 0 just indicates that you have no extension of credit under your Social Security number. Okay. Were you going to ask a similar question?
No, but actually, yes, I have a question. I recently, so I know I'm a little late, but I recently applied for a credit card, right? And I got approved by Discover.
Okay.
And what are your recommendations? I know you said it's like basically almost impossible to reach an 850, but what do you recommend for somebody of young age to reach like a very good or exceptional credit score?
Okay, so I'll get to that in a few slides. I will get to that, but yeah, no, that's good. So before we go any further, by a show of hands, how many of you do have a credit card? Okay, some of you do and some of you don't. Those that do, have you used it for an extended period of time, let's say, more than 12 months or less than 12 months? Yes, you have. Okay, good. Around 12 months. Okay, very good. Those that don't have, do you plan on applying for a credit card or any type of loan? Okay, all right, good. And then the student loan question comes up a lot on college campuses. How many of you currently have a student loan? None. Okay, good. How many of you anticipate having a student loan maybe when you go to your next institution? So yes, a few of you will, right? So this presentation, although it's geared for, understanding credit and managing your credit, it's important to know those of you who do not have credit cards but will have student loans, that is also a loan, that is also an extension of credit, so that will also appear on your credit report, all right? There is no, other category that student loan fits in when we're talking about credit, okay? So if you have no other credit card other than just a student loan, I like to describe that scenario as you do have one large credit card. You have your student loan. So the way you make payments on it when your payments are due is going to get reported through those 3 reporting agencies the same as a credit card would. All right, so the behavior is very important. Once you do have a score, the percentage, the breakdown of that score is illustrated here. So of the 704 that was the average for the 2018 year, 35% of your score comes from your payment history, 30% comes from the amounts that you owe. So if you owe large amounts, if your balance is very high and your minimum payment is very low, it's going to take you a long time to pay that off, that's going to prevent your score from going up for a while. Right? You'll have a score, but 30% of your score is the amounts that you owe, so the amount of debt that you owe in all your accounts. 15% is the length of credit history. So if you just applied for your first credit card and your credit file is this thin, as I mentioned, that 15% number is going to be very different than if you had some type of credit file for an extended period of time, like 5, 10, or 15 years. Okay? And then the other two components, the 10% new credit and 10% credit mix, although it's a very, very small number, it is impactful to the entire FICO number. So as an example, the credit mix, that 10%, you'll see here in bullet number 5, the mix of your credit, retail accounts, installment loans, finance company accounts, and mortgage loans. So since we're on a college campus, I will use this example. Cell phones. Your cell phone, you may pay your cell phone bill on time every month, and you may have paid your cell phone bill on time every month for an extended period of time. But there is a ranking order of types of loans and types of credit in this credit mix. So unfortunately, a cell phone bill doesn't rank as high as a credit card or a mortgage or a student loan. So that's important to know as well, right? So those of you who have been paying your cell phone bill on time, great. Always pay your bills on time. But remember how important in a credit scheme of the world, you know, your cell phone bill is kind of down here, your mortgages and credit card bills and student loan payments are up here, okay? You still need to pay everything on time, okay? But you'll get rewarded for paying these on time before you get rewarded for paying the ones on the bottom on time, okay? There is such a thing as soft hits and hard hits. So has anybody heard those expressions at all? All right, so in terms of access to your credit report, to your personal credit report, soft credit inquiries happen behind the scenes, and they result in a lot of the marketing offers that you get in the mail. So the gentleman with the Discover credit card, maybe he got a postcard in the mail that encouraged him to apply for the Discover card, or a Capital One card, or any other type of bank card. Those are marketing initiatives that finance companies do. All finance companies do them. And the way they wind up in your mailbox is through some soft credit inquiries that those companies have done to your credit report. All right, so they basically purchase a list, or they go out to FICO and they say, can we have information on, you know, everyone who fits in this category, you know, FICO scores between this range, maybe age demographic between this range, and in certain zip codes throughout the country. So that's how those offers get in your mailbox. Those are considered soft inquiries because they're done behind the scenes, and they're done, yes, without your permission, okay? But there is no negative effect on your credit report, okay? There is no negative effect on your credit report. They are visible on your credit report. So later on, I'm going to go through the process of accessing your credit report and showing you what's there. And you'll be able to see the companies that have performed soft inquiries on your credit report. Hard inquiries are the opposite. Hard inquiries are inquiries in which you yourself have applied for a card or a loan, and that bank or that financial institution pulls your credit and accesses your credit to determine whether or not you're going to be approved or denied, to determine whether or not they're going to offer you a 10% or a 5% rate. Those are hard inquiries, and those will appear on your credit report. Okay, so there is some confusion out there in the world as far as those soft and hard credit inquiries, or hits, if you will. And just know that rate shopping is allowed. Rate shopping is allowed. What that means is that we, the industry, we encourage all consumers to compare and shop around for the best rates. When you do that, you're accessing or you're giving lenders and credit card companies approval to pull your credit report multiple times during a certain period of time, right? Because you're looking for the best rates. Or let's say you're looking for a car loan. You're going to 3 banks to find out who's going to give you the best rate. Let's say you're looking for a mortgage one day. You're going to go to 3 or 4 mortgage companies to find out who's going to give you the best rate. Let's say you're looking for a student loan. You may go out to 3 or 4 different student loan providers to see who's going to give you the lowest available rate. Rate shopping is allowed as long as all of the inquiries are done during a 45-day period. At the end of that period, your credit report will reflect just one inquiry. Okay? So just keep that in mind. And those inquiries will be reflected as hard credit inquiries. And those are allowed, like I said, auto loans, mortgages, student loans, and certainly when you're looking for a apartment, a lease, things of that nature. Okay? 45-day window is where you're allowed. Any questions?
I have a question. If you have $1,000 on credit card, and let's say you own $800, at the end of the month, like what percent do you should be able to pay in order to get your FICO up?
Okay, so the question was, I have a $800 balance on a $1,000 threshold credit card.
Yeah.
So, and your question was at the end of the month, how much do you have to pay? So, one of the things that I will go over, I'm going to answer that question now. One of the things that I'm going to go over and describe is there is not a one single type of transaction event that is going to help you increase your score. This is over time, right? So if you pay off that balance at the end of the month, that's great, right? You lowered your balance, or you eliminate your balance, so you will save yourself some interest payments over time. But your score is not going to get a jump just because you paid off the balance. The score, your credit report, the bureaus, what they're reporting on, remember, is the length of payment history, your responsible payments, your on-time payments, your behavior. So one instance is not going to impact your score. It's going to be a multiple type of scenario where multiple payments over a period of time. So if the question was, over a 6-month period, I paid off this balance, I paid 6 payments on time, will that help? Yes, that would help. It's over 6 months. However, it's not telling you to let that balance ride over 6 months, because the recommendation is that you pay off your balances as soon as possible when you can. Okay? The impact on the score is going to be the same over time, but not over the 30-day period. Okay? So this slide goes over some myths and some facts, and I think we've all heard of these scenarios in one way or another. What if you have a low score? Is it going to stay low forever? No, the answer is no, it's not going to stay low forever, because it's constantly evolving, right? So you say you have that, you charge $1,000 on your credit card, you bought something that costs $1,000, and your monthly minimum payment based on that $1,000 could be $50, right? So you can, in theory, it can take you 2 years to pay off that balance by paying $50 a month. You'll increase your score, or you'll have a healthy credit score because you're paying on time for 24 months. The downside of that is that you would probably have paid more than $1,000 over that period of time, right? So it is a scale that you balance, but that's why the recommendation is that you pay off as much as you can when you can, but make sure that you're making payments on time on a regular basis, right? The myth, checking my FICO score will lower my FICO scores. I just went over that one. No. Checking your score will never impact your score. Myth 3, I have to have a large income to have a large FICO score. No. Your FICO score is not based on your income. Your FICO score is based on those other things that I mentioned. Your payment history, the type of payments that you're making, the length of time that you have credit, things of that nature. And then myth number 4, which is completely false, my FICO score isn't important. There's few things that will follow you throughout your life, or that you'll have with you throughout your lifetime. You the color of your eyes, not your hair, right? Because I can answer anything to that question. The color of your eyes, your social security number, your date of birth, your FICO score. This is one of the things that is always going to get reported on you from day one of credit to your last day of credit, whatever that may be. Improving your financial health. So back into the discussion of, what can I do I have a card, or I'm looking to open up a card, how can I behave properly, or what are things out there to help me with? So the three major reporting bureaus that I mentioned, Experian, Equifax, and TransUnion. As credit consumers, we are all eligible to access our credit report for free every year from each one of the three major reporting bureaus. Okay? We in the industry also like to recommend this website, annualcreditreport.com, as a fourth source of free information. So once you get into the habit, and let me ask you this, has anybody ever accessed their credit report from any of the agencies you have? Okay, very good. From which agencies?
Credit Karma.
Okay, from Credit Karma, okay. So I'm glad you mentioned that, because that one is a little bit different. Not that it's bad, but it's a little bit different. But the three major reporting bureaus, Experian, Equifax, and TransUnion, plus this annualcreditreport.com, will give you your entire credit file. So the abstract, your entire credit file, your credit report in its entirety, what it looks like, and we'll go over, and I have a slide that shows you what it looks like. Other sites like Credit Karma and Credit Sesame will give you your FICO score. Okay, so they will give you your score. They may give you some other bullet points of information, but they will not give you your abstract in its entirety the way the three reporting agencies will. Okay? As a consumer, you should know that you can access these bureaus' file every year, once a year for free. So what I recommend you do is every quarter of the year, you go out to each one of this, to a different site. That way, at the end of a 12-month period, you have pulled 4 copies of your credit report for free. So you use annualcreditreport.com the first quarter of the year, go to Experian the second quarter of the year, go to TransUnion the third quarter of the year, and then go to Equifax the fourth quarter of the year. That way, you're able to identify any activity. So if you're using your credit card, or if you're making payments on a credit card, and you're making payments on time, you want to make sure that those payments are being reported on time. You want to make sure that your score is improving instead of decreasing. Because no one's going to call you and tell you, right? So you have to actively go out there and pull your report, and it's a good way to check all of the bases to see what's being reported in your name. Okay? There are instances where you may have something on your credit report that you're not aware of, you didn't know was reported, and if you're not in the habit of pulling your credit report, you're not going to find out about it until the next time that you complete an application for credit, and maybe that's going to prevent you from getting approved, right? So always get in the habit of pulling and accessing your credit report. This is a little bit of a Q&A, mostly for student loans, so I'm not going to spend too much time on this, but just know for any of you who will borrow in the future any student loans, those are extensions of credit, and they are represented on your credit report just like a credit card. Okay? Building your credit history. So when looking at the types of different cards that are out there in the industry, I mean, this gentleman just mentioned the Discover card. There's many different ways to build your credit. The credit card mechanism is one. Many of you will probably finance an automobile at some point in your life. That is another one. Student loans, as I mentioned, is another one. Short-term loans, anything that is reported, anything that's an extension of a service in which you have to pay at a later date, that will get reported. And those are ways to build your score. Okay? It's important because, and I'll start out with this last one here. in New Jersey and in many other states, and I think I just saw a bill last week, actually, that the governor of New Jersey is proposing, or someone proposed for this to be eliminated. But right now, how many of you have cars? Have your own car with your own insurance? You yourself, your parents, okay. Everyone that has a automobile insurance policy, at least in New Jersey, let's just talk about New Jersey, when you applied for that insurance, the insurance company pulled your credit report, and based on what your credit report looks like, your premium could be higher or lower. Okay, so they use your credit report as a basis for a portion of the premium. That happens in a lot of states. It's happened in New Jersey for about the last 8 years. But that's just one example of how you can benefit or not benefit from having good credit, right? In a day-to-day scenario that does not involve a credit card. But if you do have good credit, you will make yourself available to lower interest rates from any new cards that you apply for. You could save a lot of money over time on all of your transactions, and you'll have the ability to be more selective, right? You'll have the ability to be more selective because more lenders will want to do business with you, as opposed to having bad credit and a low score, where many lenders will maybe say no, decline your applications. Those that do may give you credit at a higher rate. So instead of that, 5% credit card offer that you got in the mail from Capital One or Discover or Chase or any of the other bank cards, if you have bad credit, you might not qualify for that 5% rate. Maybe you only qualify for the 19% rate. Okay, so it's very important to monitor that, and it's very important to know. So there is a point in time when you do have a couple of accounts. The recommendation is that you know what the balance is on each one of your accounts. So the gentleman, I'm going to use you again as an example, the Discover card. If you've used it, do you know what the balance is on your account? You don't have to tell me what it is, but do you know what it is today?
No, but so my beginning balance is 500. Says I have no credit.
Oh, okay, yeah, that's fine. Yeah, that's typical. That's like a very introductory first step.
Right.
But in your scenario, if you had a $1,000 balance and you wanted to pay off $800, so you know your balance. So it's important to know your balances on every one of your accounts every day of the week. It's important to know that this monthly payment that I'm making of $150, that's going to change my balance from $1,000, hopefully down to $850. It probably won't do that, but it'll be an interest charge, so it'll bring it down to $800. Okay, so, or $900 in this example. So it's very, very important to know. Some other types of smart tips to use is always live within your means. I mean, it's not the first time that you've heard this. You see it here, this is number one, but always live within your means, and no difference between needs and wants, right? I mean, so that's pretty basic. Using the card that you have wisely is also very important. So those of you who have cards, or those of you who are looking for your first card, on college campuses, I come into a lot of situations where people run up their credit card bills on fast food and convenience store purchases. So, not retail, not buying a fancy pair of jeans or anything like that, but buying pizza every night for a week on your credit card. Or maybe you don't feel good today, so you're going to go down and get some Robitussin and use your credit card to buy the Robitussin. So there are decisions, there are smart decisions that you can make in each one of those examples. The pizza every night example, I think that's an obvious one. Don't charge pizza every night. Try to use some cash. The drugstore examples on college campuses, not necessarily a campus like this, but like a dorm campus, you'll find a drugstore close by, Walgreens, CVS, whatever, open 24 hours a day. 2 o'clock in the morning, it's filled with college kids that live on campus that run out and get the Robitussin that they need or get any other type of convenience store item that they need. It's 2 o'clock in the morning, maybe they don't have cash, maybe they don't want to stop at the ATM because it's 2 o'clock in the morning, and you're pulling out your credit card. You're doing that on a daily basis. Those balances now are subject to whatever interest rate that credit card is charging, and they're not wise purchases to put on your credit card, right? So, navigate that and use it wisely. If it's a prescription, and if it's, $100, $200, that's understandable. But if it's a bottle of Robitussin that costs $25, and it's 2 o'clock in the morning, and you don't have $25 in your pocket, and you want to use your credit card, well then, why don't you use the generic brand instead? You have to use your credit card, so use the one that costs $10 instead of the one that costs $25. And make sure you pay that $10 off at the end of the month. Very important. But budgeting, right now you're in a situation where you may not be working, so there may not be an income coming in. However, once you do get your first job, or if you're working part-time, or if you get a summer job, very important to know how to treat that income, right? Budget your expenses if you have expenses. Right now maybe some of you live with your parents, maybe you'll be on your own shortly. Know how much everything costs you on a monthly basis. Know what your expenses are on a monthly basis. Your rent, your utilities, your cell phone bill, your groceries, put a budget in place. If you're sharing expenses with someone, if you're living with roommates, communicate those. Know how much is coming into the entire unit, apartment in a house, 1 roommate, 2 roommates. Pull all your resources together, divvy up expenses, know what the expenses are. So communication is listed there as number 1 because it really is the number 1 tip to creating a solid budget when you have others that are sharing expenses with you, is communicating what those expenses are, and more importantly, who's going to pay for them, right? If you're splitting expenses, you're splitting all expenses. You come up with a dollar amount. So we are a student loan company, so we always list student loans first as far as expenses. We understand that they may be behind or below some of these others like mortgage, rent, or groceries, right? But this is anecdotal. But put it all together, put it all down on a piece of paper or on an Excel spreadsheet. It's a good exercise to go through, even if you're living by yourself. So if you're living by yourself, or even if you're living with your parents, once you start working and you're responsible for certain expenses, know what the expenses are, right? Because at the end of the day, there's going to be a bottom line, and you want that bottom line to be in black ink and not red ink. Okay. Any questions on that? Yes.
Actually, I do. Way back in the day, I had a teacher in high school who recommended me to use mainly in necessity, my credit card mainly in necessities such as like gas money and stuff like that, because it racks up over time. And it's like, he told me to use it mainly on those things so I can have the ability to pay my card, what I owe on time. Do you think that's a good decision to do?
So now that
Because I heard the Robitussin thing is kind of like similar.
Yeah, that's very similar, right? So
Yeah.
okay, so there may have been a time when it may have been beneficial because of the rewards, right, that they were offering that particular card. Gas cards, some other cards, some other extensions of credit. Yes, they'll help you because you're paying them off in time. At the end of the month, you're saying you're paying off the entire balance, and then you're just gonna fill up your car again 4 times next month, once a week. Put it on your credit card, and you're gonna pay off the entire balance. That's fine. As long as you work within the confines of that behavior, right? As long as you pay off the balance at the end of the month, and don't wind up paying interest on that gas purchase.
Exactly. Yeah, that's what I was thinking about.
Yeah,
So,
exactly.
No, because I had kind of like, that's what I was thinking about because I don't really have like any loans right now, and I don't really have like, I'm not gonna get a mortgage anytime soon.
Right.
And so what I'm paying right now is just like menial stuff, like if I have to buy textbooks or if I have to pay for my classes, if my scholarships don't go in. And so I was thinking, because I know it's basically, what I'm gonna be buying with my credit card, it's almost similar as if I was using my debit card as it is. So I'm not gonna be spending like obviously I'm not gonna overspend what I have in my bank account.
Right.
So I would apply that when I use a credit card, so like, let's say I'm gonna buy, I don't know, like, is it wise, like, let's say I use it for whatever purchases I have, and then I pay them all off, like, at the end of the month or whatever. And usually for me, like, whenever I owe anything, I usually try to pay it all, like, you know, like
Off
immediately.
when you can, Right,
Because I don't like going anything, so like, when I was younger, I wasn't really like that, that's why I didn't get a credit card.
Okay.
But now, like, I'm like, you know, more so like, you know, in my 20s now, like, I'm a little bit more, you know, I'm a lot more, you know, responsible with my
More responsible,
finances.
you're more interested in the outcome.
Yeah, so
Okay.
whenever I owe anything, so like even in the school, we do payments plans sometimes if your classes aren't covered. So like, usually I try to pay everything like, you know, as soon as possible before the due date.
Okay.
So I was thinking if that's the same kind of pattern I would do when I have a credit card, where I just try to pay everything off, you know, before it's due.
Yes.
Don't
Yes.
go over what I can't pay.
Yeah, so both good points, right? Both along the same lines.
Mhm.
Yes, it'll be advantageous to you for your score, for your report to do that.
Mhm.
As long as, again, as long as you keep in mind this thing here, that it's,
Mhm.
you know, using it wisely, right? So using the credit wisely. So, you know, the gas purchases or those small things, those small purchases that you would use your ATM card for, as long as you continue to have money in the bank, yes. You know, the answer would be yes to each one of those, and you're making consistent on-time payments. Your credit score, your credit report will improve. It will show positive activity. So the one area that we just caution you is you know, don't wind up paying interest on some of those purchases. So if your intention today is to pay this off at the end of the month, then make sure you set aside some dollars to pay that off at the end of the month.
So if you pay the full amount at the end of the month, they don't charge you interest?
If you pay the full amount at the end of the month, you will not be charged interest on those purchases, right? By most credit cards. Again, you have to read the fine print, but if you close out your balance, you know, you pay. Important thing to note about interest. Interest is charged daily, okay? There are types of loans that have an annual percentage rate, and they'll disclose all that information. So the annual percentage rate is an annual rate. So if you have a balance that extends for 365 days, they're going to charge you X amount per day, billed monthly. Okay? So that's the important thing to remember. So you're paying interest on a daily basis, but they're collecting it monthly.
So you don't want to spend, you don't want to have to pay interest for something as tiny as like a bag of chips?
Correct.
Okay, so.
So make sure you just pay that off at the end of the month, yes.
So my question is, do we have to use the credit card like all the, like let's say I use my credit card this month, but the next month I didn't use it. And then the following month after that, like I do use it.
Yeah.
Or say like for another 2 months, say, you know, I didn't really need to use anything.
Good, that's good. No, so the recommendation is, listen, the recommendation is to, you know, use it wisely, use it when you have to. If you have a balance, you try to pay off as much as you can on a monthly basis, on time. So I think the three important factors there are on-time payments, limiting the amount of interest that you're paying based on some of those purchases. Obviously, if you're paying off your car, if you're paying off your home, if you're paying off your student loan, you know, those things take a long time. But if you're paying off the pizza every night, you use your credit card, try to pay that balance off at the end of the month, so there's no interest charged on pizza.
So that's the other thing that's kind of confusing me. So like, let's say I do buy pizza for like, you know, like a few days. Let's say
Yeah.
for Monday to Friday, I bought pizza. Can I just pay it off like the end of the week if I want to, or does it have to be paid at the end of the month?
You check with your provider. I mean, you can probably go online and make a payment, but they'll bill you. You'll be responsible for it at the end of the month. They'll usually have a 28 or a 30-day billing cycle. Okay, so you could check with your individual card in that scenario. Okay?
Yeah. Because I always wondered if they have like, you know how like some they have like a website and like you
Yeah.
go on there and you just pay whatever.
Everybody has an online account these days.
Yes.
All right, so I know I'm going to get to that in a couple of slides as far as the availability and the ease with which you can make payments. One more thing to know about what credit cards and banks are looking at when they review your application and your FICO Score and your credit report is your income to debt ratio. Okay, so you'll start to hear, as you mature and your credit evolves, you'll start to hear information or terms like your income to debt ratio. So that is a ratio that every bank and credit card company has in their underwriting process, in which they assess the amount of income that you have, and they look at the amount of expenses that you have. And that's all available on your credit report, okay? They derive that, it's your revenue divided by your expenses, and they come up with a percentage, 3 buckets. 35% or less means that you're an excellent risk. 36 to 49% means that you're a so-so risk. You have an opportunity to improve that number. 50% or higher. So if your expenses are more than 50% of your income, you're in a danger zone. So you're in a danger zone. There is room for improvement. But what you'll see here is that you'll see some denials. You'll see some higher interest rate offers. Okay, so just be cautious of that. And know that a lot of your income and expenses do factor in to the approvals and the interest rate offers that you'll get from the credit card companies and from other loans. Okay. We'll take this hold out for a minute. We'll take a look at a couple things, and we're running out of time. Good debt versus bad debt and toxic debt. So I mentioned earlier, there is a prioritization list as far as what is good, what is bad. So good debt, student loans, business loans, housing loans. Bad debt, high interest rate personal loans, auto loans. So a lot of you will have an auto loan at one time or another. Auto loans stretching more than 5 years are considered bad. Most new financing arrangements are up to 5 years. That's where they'll offer the lower rates. Many of you probably see offers for auto loans that are 6, 7, 8 years in term. Those have the higher rates, okay? So be cautious of those. Higher interest rate credit cards, also bad debt. So you're trying to position yourself to get the lower rate credit cards. Toxic debt. We look at toxic debt in 2 categories. One is any loan, any credit that requires collateral. Right, so if they're asking you to leave something at the counter before they extend credit to you, that's probably not a good loan. And anything with an interest rate of over 36% is also considered toxic. How much time do we have? We're over? Okay, sorry.
No, thank you.
Just one more thing that I wanted to show you, and this PowerPoint will be available to you. I'll send it to you guys again. Okay? Your credit report. So everything that I described, everything that I went over is listed on your credit report, and it looks just like this. So all credit reports from the 3 reporting agencies will look the same. They'll have some nuances that are different and pertinent to just that agency, but they all will list your identifying information, the amount of credit you have available to you, the amount of credit that you're using, a record of making payments on time or not making payments on time, and any collection activities that have taken place in your accounts. Okay? All right. Anybody have any other questions?
Yeah, I have 2 questions.
Yeah, you do have 2 questions.
One
Go ahead.
one thing, the least important one first. So,
Yes.
All right, so do you think having to get a card, is it a necessity or a mandatory thing in order for you to build your credit?
Credit card?
No, in order to get a card, like,
Okay,
financing.
new car or used car? Anyone?
Yeah.
Okay, so it's, you will have to have some type of credit extension already. You will have to have something on your credit report. You will have to have a score in most cases.
I don't plan on getting a card, That's what I'm saying, like, is it like a necessity in order for me to build my credit?
No,
No, right?
no, not at all.
Okay.
One credit card could help you build your credit.
Right,
And build it properly and build it up to a good score, one card.
no. My idea is to buy a house before I hit the age of 30, right? That's like, what do you recommend for me to build a better credit at my age now?
One card, use it properly, make payments on time, and pay off the balances when you can.
Because I know mortgage is like very complicated.
Yes.
It's a loan, yeah.
But you
It's a
don't
large
need,
loan.
so you don't need more than one card to be able to achieve something. One card will get you to a high score. It's your behavior. It's your behavior with the card.
Leaning toward the test.
All right.
Okay?
Okay, okay, so I had a question, okay, so like, so I wanna get a, I wanna figure out like better, because right now my tax like, it's like $700, right? But like, and I don't have a credit card right now, but when I pick up.
All right, so today's financial literacy, Tuesday is career. We're going to talk about salary ranges, careers in computer science and information systems technology. That's Tuesday. Somebody's going to come in and talk about that. That's going to be, so if you want, you may need to do a little research before you get here so you can ask some really good questions about what you're going to do once you get your degree. This is Mr. Gonzales. He's going to talk today about credit, something you guys really need to know about. And I asked him personally to come in because I've seen the presentation and I think it's something you guys can make use of.
Oh, my debit card information was recently stolen, and what should I do about that?
Did you report your card stolen?
Yeah, I reported everything he paid for, but sometimes he just took it into his own account, took out money from the ATM, so it's kind of hard to, get my money back. Basically,
If you went to the ATM, they have a picture of it.
Okay, he basically bought $500 worth of hookers and pills.
Have them prosecuted.
Yeah.
And sue.
When you use the ATM, they take a picture of it.
So I'll go over that in the presentation. I'm not going to start with that, but I'll go over it.
All right.
Everyone is in here for the presentation?
Yes.
Yes. Yes.
Go for it. Go for it, yes.
Okay, all right. All right. Good morning, guys. Well, good afternoon, guys. Ladies and gentlemen, sorry. So my name's Ed Gonzales. Thank you for having me. I'm from a small company called Sally Mae. You may or may not have heard of us. We are dedicated to student loans and financial literacy. The information that we are going to go over today is going to be pertinent to your understanding of credit and credit management. Okay? So whether you have a credit card, whether you don't have a credit card, whether you have multiple credit cards and you want to manage your credit and manage your FICO score a little bit better. So we're going to go over the ways to do that. We are going to go over protecting yourself from scam. Okay, so you just mentioned ATM fraud, so I'll go into that a little bit later on in the presentation. I'll show you what your credit report what a credit report looks like for those of you who have never seen a credit report, and then we'll just close up with some tips on good financial management. So, but before I do get started, by show of hands, how many of you do have a credit card?
Does the debit card count?
Yes. So how many of you have multiple cards? Okay. So, and how many of you have loans? Any type of loan? Car loan or student loan, mortgage, any type of loan? Okay, good. All right. So you've all kind of used some form of credit in some capacity. Basic definitions of credit are always good to circle back to. I do always like to discuss some of these things in terms of you get so focused on your day-to-day activity, your schoolwork, your home life, anything in between. Sometimes we all, as consumers, we all forget that 1 + 1 still equals 2, right? So basics, definition of credit is an extension of a good, a service, a product, and for an agreement that you will repay that later, right? That's the basic definition for credit. Your credit history, a collection of all of those types of extensions over your lifetime. So your file, your credit history, I like to use the analogy that it's like this, it looks like this. Over time, right now, if you have one credit card, if you just open the credit card, you have a very thin credit file. Over time, after you use multiple credit cards for multiple transactions over a long period of time, and you add some car loans in there, you add some student loans in there, you add a mortgage in there, your credit file might be this thick. So that is what we refer to as your credit history. So it's every transaction on every card, every extension of credit that you would have received in your lifetime. All of that information combined is your credit score. So your credit score is a numerical representation of your credit file and your behavior and your repayment habits on all of your extensions of credit. Your credit score is derived from a company called Fair Isaacs, and it is the agreed upon number to use in the industry for banks and credit card companies when they assess your application for credit. Now, the way I like to frame this presentation is you're always trying to set yourself up, you're always trying to better your credit score, your FICO score, your improvement of your score for the next available extension of credit. So for the next time that you go to complete an application. So let's say you have a credit card, you're making payments on it on a regular basis, or maybe you don't have a balance right now because you haven't used it in a while. You always want to get into the mindset where you're setting yourself up to be more attractive for the next application that you're applying for than you are today, right? Because that next application, maybe it's another credit card, but you haven't behaved well with the current one that you have. You made a couple late payments. So you may not get that credit card, or maybe you'll get that credit card at the highest possible interest rate offered. Let's say you're looking for a car loan, right? But again, you have or have not behaved properly with your credit account. So that car loan is going to look different to some of you, right? You may have a higher interest rate or a lower interest rate based on your previous behavior, right? So you want to set yourself up to put yourself in the best possible situation for the next extension of credit. So back to FICO scores. FICO score, I said it's a numerical score that represents your credit risk, basically, and it's a range that is defined as between 300 and 850. How many of you here in the room know what your score is right now? Good. A few of you have raised your hand. How many of you know of what your score was at some point in your lifetime? Okay, very good. Very good. So, those of you who raise your hand to both questions, you know that somewhere on this line, you fall somewhere on this line, right? Or in this ladder. So, from 300 to 850. We as consumers could potentially have an 850 maybe once or twice in our lifetime. Maybe when we first got our extension of credit and we made on-time payments for a period of time, 12, maybe 24 months, and we paid off that balance. We don't have any other debt. Maybe we have a score that's pretty good, close to 850. As you tack on debt, as you ask for more credit, that score may not stay in that 850 ballpark. Fast forward to when you're in your maybe 80s and 90s and you have no more debt, you're on a fixed income, you've had credit, extensions of credit for 40 or 50 years, you behaved properly. At that point in time, maybe you'll have an 850 again. In between those two, we're going to be all over this ladder, right? And it's based on your payment history and how you behave with your accounts. So right now, the current guidance that we're getting from FICO is the range in scores. Lenders and credit card companies are putting scores in these categories, all the way from exceptional at the 800 plus level, all the way down to poor, less than 580. Okay? And for those of you who may have seen a 0 or no score on your FICO score, just means that you have no extensions of credit. So it doesn't mean that you have a 0 on this, in this vein, because active scores are only from 300 to 850. Okay, so if you have no credit cards, if you've never had an extension of credit, and you go out and you pull your credit report tomorrow, you may see a 0. Doesn't mean that it's less than poor, it just means that you have nothing to show. Okay? This slide tells you that the average FICO score of U.S. consumers in 2017 was 700. That has now been updated to 704 for 2018. All right, so we have data that brought that up to 704 in 2018. So in that range, and I'm sorry, before I go any further, in this range, this is where you'll find various types of results from applications, from credit card applications, from personal loan applications, from bank applications. So if you're in a fair category, you might see some lenders approving, most denying. If you're in a good category, maybe you'll get all approvals, but there'll be varying levels of interest rate offers that you'll get. If you're in the very good section, which is here in that 740 to 799, you should get approved from everything that you apply for, and you should be in a situation where you get the best rates for everything that you apply for. Okay, when I say everything that you apply for, again, with the extension of credit, whether it's a credit card, whether it's a auto loan, whether it's a student loan, whether it's a mortgage, a personal loan, any of the above. So the score gets broken down a little bit further. So what goes into the score? So 35% of your score is based on your payment history. Okay? 35%. Did you make on-time payments? Did you miss one payment out of 24? Did you pay on time for 36 months, but that's 37th month? You forgot, you still had a balance, and you missed that payment? All right, so 35% is based on your payment history. 30% is based on the amounts that you owe. All right, so do you owe $30,000 on your card? You just owe $3,000 on your card. Right? So 30% is based on what you owe. 15% is the length of credit. So this is the example that I gave on the credit file. Do you have a file that looks like this, that's, that you've had extensions of credit for 10 or 15 years, or do you just have one credit card that you just got last week? Right? Big difference. And then the last 20% is broken down between new credit and your credit mix. And what I will say about credit mix is this: there is a pecking order of good loans versus not so good loans versus bad loans, and there also is a pecking order of types of credit that do impact your score at this 10%. And since we're on a college campus, I might as well mention that many students without a card, here you guys all raise your hand at some point in time saying that you had some type of an extension of credit. But for those of you who have zero, no credit cards, no extensions of credit, but you have a cell phone in your pocket, and you make payment, you make the payment, you went to the Verizon store, the phone is under your name, you give your social security number, not your mom or dad's, and you're making the payments on time every month, or maybe you missed a payment here and there. Cell phone bill is not the same thing as a student loan, as a mortgage, as an auto loan, or as a credit card. Okay, so the priority, the pecking order, the cell phone bill, it's important, but you may not get the maximum bang for that 10% versus having a credit card bill paid on time, or a department store, Macy's or Lord & Taylor bill paid on time. Okay, so just know that. Yes.
Is that the same for like medical bills?
Okay, so that's more of a situation in which you are in collections versus paying the actual provider. So when it comes to medical bills, so I would say no, it's not the same, because once you're paying a medical bill off, you're usually paying the physician's office. So there is no impact on your credit report because they're collecting that in-house. If they're using a service, if you miss a payment, and so this brings up an interesting scenario, right? It's not bad until you miss a payment. If you miss a payment, then they're going to report it. But if you're paying on time, That's an installment agreement, so that's probably not going to appear on your, and they're not a bank, so it's probably not going to appear on your credit report. If they are using a third-party service, however, like a bank or a collection agency or any type of other retail provider, then it would be, okay? Any other questions on that? Okay, so you may have seen or heard of hard hits and soft hits credit inquiries. You may have opened up your mailbox last night and seen offers from companies that you don't do business with, right? Discover, Capital One, Chase, PNC, maybe they're filling your mailbox up with advertising and with offers. How those offers got to your mailbox is those companies, they went out, they went to the credit reporting bureaus, TransUnion, Equifax, and Experian, and they performed soft credit inquiries on your account, on your credit report. That enabled them to determine that you may have the possibility of being eligible for one of their products. That's how those advertisements got to your mailbox. Those do not impact your credit report. Those do not impact your score, okay? Inquiries that do impact your score are these hard credit inquiries when you apply for credit, when you apply for a loan. Let's say you're given a new credit card today. You have one already, you really haven't been using it. You have a new one, now you have two. Now you have one with a $1,000 maximum balance and then another one with a $2,000 maximum balance. The reason why that impacts your credit report and your score is because at any given time, beginning tomorrow, you can run out and charge up to $3,000 worth of credit on both of those cards, right? So your credit report will change based on the amount of extensions of credit, or your FICO score will change based on the amount of extensions of credit that you do have, okay? So that's one thing to look out for. So that's the definition of hard credit inquiries, when it's you, the consumer, that's applying for these accounts. Rate shopping is allowed, right? So if you're ever in a situation where you have to compare and contrast different types of rates for whatever reason, don't be afraid that all of that activity is going to impact your credit score negatively, because it does allow, so your FICO score and your credit report do allow for rate shopping, and rate shopping is defined as a 45-day period in which your credit report and your FICO score will not negatively be impacted by multiple applications or multiple extensions of, or asking for credit. What do I mean by that? Let's say you're looking for a car loan. You go to 3 different banks, you compare those rates. Let's say you're looking for a student loan. You go to 3 different banks, you compare the rates. A mortgage is the same thing. So for auto loans, mortgages, and student loans, at the end of that 45-day period, your credit report will reflect just one inquiry. Okay, so that's very important to know. When you are in a situation where you're rate shopping, make sure that you do conclude your shopping in that 45-day period as well. Okay. Some myths versus facts. Many people have heard of these things. If you have a bad score, it's going to stay bad forever. Checking my own FICO scores will lower my score, like I just mentioned with the hard versus soft inquiries. A poor score will not stay poor forever. You have opportunities. So you have an opportunity on a daily basis to improve your score. It's how you behave with your extension of credit and how long it takes you to pay off balances, and are you making the minimum payment, or are you making a payment on time every month for the extension of the term, okay? It's a evolving number. Checking your score, as I mentioned, will not negatively impact your score. Another common myth is, I have to have a large income to have a high FICO score. Your income is not a factor of your FICO score. Your behavior is a factor of your score, not your income. And this last myth that you see here, my FICO score, isn't important. So I mentioned earlier that there are a few things that will follow you for your life. Your date of birth, your social security number, the color of your eyes, those things on your driver's license. Your FICO score is one of those things that's going to follow you for your entire life, right? So you're always going to have one if you have an extension of credit. It's how well you behave and how well you pay your bills on time that is going to improve and keep your score high. Ways that you can manage your credit and your score. I mentioned paying bills on time. Apply for credit only when you need it. Many people used to, and hopefully that's changed. We haven't seen new data, but a lot of people used to just apply for a credit card because they got that offer in the mail with no intention on using it. But they opened it just so they could have it. Right? So open cards, apply for extensions of credit only when you need to. Right? That's why they give you that 45-day window to rate shop to find what the rate would be. Make more than your minimum payment. One of the things that has been kept like a little bit of a secret over the last 5 or 6 years, balances. So if you have an open balance on your credit card, make sure it's less than 50% of the available limit, right? You always want to know what your balances are. So those of you who raised your hand and said that you do have credit cards, do you know, and if you have a balance, right? You could have one and not have a balance. That's ideal. Do you have a balance? Do you know what your balance is today? Do you know what your balance will be after next month's payment? Right? Know what your balances are for each of your accounts on a continuous basis. When you're making payments, know what the new balance is. Right? It's very important. Review your credit report regularly. So there are 3 major credit reporting agencies: Experian, TransUnion, Equifax. We like to refer to a 4th source, which is annualcreditreport.com. All right, so this site is a little bit different than that free creditreport.com site that you may have heard of. The free creditreport.com site is the one with the Vikings on the commercial, and they do a lot of advertising. That one is it's free after you pay your membership fee. All right, so it's not really free. Annualcreditreport.com is the one that we verified that is free. And what I do like to recommend is that you get into the habit of accessing and pulling your credit report for free, because you have access to it for free. As consumers, we can go to each one of the 4 sources that I mentioned on an annual basis and access your credit report for free every year. So 4 sources: Experian, TransUnion, Equifax, annualcreditreport.com. Each quarter, go out to a different site. So first quarter of the year, try annualcreditreport.com. Second quarter of the year, go to Experian. Third quarter of the year, go to Equifax. Fourth quarter of the year, go to TransUnion. And at the end of a 12-month period, you'll have 4 free credit reports on your activity. Okay? That's very important, especially if you're using your credit and making payments. You want to make sure that all of the activity is reflected positively. You want to make sure that there are no mistakes. You want to make sure that they recorded and they reported your $100 payment and not that it was a $10 payment. Right? That's a data entry error. They're not going to call you and notify you that they made a mistake. You have to go out there and look at it yourself and look for it yourself. Because when you apply for a new card or a new loan, that bank is going to pull your report. So you want to be sure that you know what they're going to be seeing, right? If you identify any mistakes, you contact the bureau, you contact the entity that reported the incorrect information. They have 30 days to correct it. Okay? Do any of you have student loans? Okay, some do. Those that don't, do you anticipate having student loans at your next institution after leaving this school here? You may, right? So you may find yourself either with a student loan that you don't have now, or you may find yourself with more student loans. So one thing to note about student loans is that although you do have caveats, as far as they're beneficial in terms of maybe the federal rate is more beneficial than a private rate, or maybe the private rate is more beneficial lower rate than the federal rate. That's all fine. On your credit report, your student loan will be listed just the same as your credit accounts. Okay, so your credit cards and your student loan payments will both get reported the same way, the same fashion to the credit bureaus. Okay, so once you're in repayment of your student loan, it's like paying a credit card. Make sure you pay it on time. If you run into problems, make sure you contact the service provider to see what kind of options you have. Okay, it behaves just like a credit account. Okay, and it will be on your credit report. So if you're in the habit of pulling your credit report on a regular basis, you'll be able to see the student loan balance as well. Okay. So we had a question in the other session about closing old accounts or opening accounts and closing accounts. How does it impact your score? So when you open a new account, your score will go down by a couple of points. Why is that the case? That's the case because you have agreed on new terms, new conditions, you have a new card, you have access to more money. So your credit report and your credit score will absorb that and generate a new score, even if you haven't used it just yet, with anticipation that now you have a bigger potential debt load. Okay, so remember what I said about the amounts that you owed on that wheel. That percentage of amounts owed could go up. Okay, so it will go down by a couple points temporarily. Yes?
All right, so does having multiple credit cards help your score go up faster? You take a hit at first, but does it help, like, because you know how every time you make a payment, your score goes up a little?
So on multiple accounts, I would say no. If you're looking to achieve a higher score, you don't need multiple cards to do that. What you do need to do is you need to make more payments on time over a longer period of time.
And is there a difference making it like on time as in the day of, or making it just like right after you use it?
That's going to be up to the provider. That is going to be based on the term, the monthly cycle availability. So just remember that so the interest charge, so anytime you're carrying a balance, you're charged with daily interest, right? It's billed monthly, but it's charged daily. You pay that off today, but the billing cycle is still open. If you hadn't paid off the entire balance, then you still have an amount that's being charged an interest rate for the rest of the month. If you have multiple cards doing that, then you have multiple or higher thresholds of potential balances, right? So remember what I said about the card today is $1,000, the card tomorrow is $2,000, now you have $3,000 worth of potential balances. So that strategy won't help you as much as make payments on time for a long period of time. But in that vein as well, you also want to minimize the out-of-pocket expense on the interest, right? So there is a chart here that, and I'll get to it, that reminds you to use credit wisely, right? So the examples of using your credit card for gas purchases, for pizza purchases every day, you know, on campus versus off campus is a different environment. The strategy of using a credit card to buy your gas every week is a good strategy if you remember to pay off the entire balance every month, right? If you don't, then you're paying interest on gas, right? So that doesn't make too much sense to pay interest on gas or to pay interest on pizza. Okay, so it's all how you use it. Okay, but one card versus 3 cards, that will raise your score a little bit better or faster. Okay. Results. What does it mean? Good credit versus bad credit. High FICO score versus low FICO score. You have good credit, you'll have lower interest rates available to you from all of the providers that you're looking at. So you could save in the long run. Bank loan, personal loan, whatever. So it's basically the calculation that your monthly gross income is divided by your monthly expenses based on the information that the the lender pulls on your credit report. Remember, all of your expenses are listed on your credit report, right? All of the agreements that you've made are listed on your credit report. The calculation will derive a number, and this category of numbers is what the lenders are looking for. Anything in 35% or less would be considered excellent. Anything from 36 to 49% will be considered an opportunity to improve. So in that category, you will get some offers. You will be approved for most of your applications. So the interest rate might vary. Anything over than that, you're in the danger zone, and they will want you to take action of some kind to better your scenario, better your situation. Okay. I'm going to skip over a couple of these slides. Just want to get to. Oh, here we go. Good debt versus bad debt. I mentioned it earlier. Pecking order of good debt: house, mortgages, business loans, student loans. Bad debt: high interest rate personal loans. How many of you have received a credit card with 19% interest rate versus how many of you have received a credit card with a 10% interest rate, right? So there's good and then there's bad in every one of those scenarios. Average debt levels this year, or for 2018, we see what they are. Average debt levels, U.S. households reporting credit cards at 15,000, auto loans at almost 28,000, mortgages approaching 200,000, student loans, whether they're federal or private, 47,000, and any type of debt. So households reporting any type of debt reported an average of $133,000 for 2018. So at some point in time, we're all going to fall into one of these categories, right? And it's how we behave and how we manage that debt that's going to lead to other opportunities in terms of credit and lower rates. That is the goal. All right. Scams, ATM right there, right? They have a picture, right? You said that, yeah, somebody, grabbed your ATM card, and so scams come in all shapes and sizes. Fraud is out there, operating behind the scenes 24 hours a day, 7 days a week. Simple things that you can do to protect yourself, emails. How many of you have received emails from the Prince of Saudi Arabia asking for money, right? I have. Don't open those, delete those, right? Delete those. Friends, how many of you have received an email from a friend of yours, but all of a sudden it wasn't the Gmail account, it was, some other domain that you didn't recognize? Don't open that. You know the email address of your friends and your family. You know whether they're Hotmail, Gmail, MSN, whatever the case might be. You know what they are. And usually, people change their email address and domain, and they tell you, right? Don't open those emails. Delete them. They're hacking attempts. Phone calls. We receive spam calls on a daily basis to our cell phone and to our landlines. Everyone does, right? Most people don't answer them. Some of them, some get answered. I pick up and I say, please take me off the list. But sometimes I pick up and I hear a recording that says, please enter your social security number to the keypad to access your account. Don't ever do that, right? Don't ever do that. Sometimes they'll call you and they'll say they're calling from your bank because they are identifying fraud, and this is happening a lot now in those situations. They're identifying fraud. What is your account number? Well, if you're my bank, you know what my account number is, right? You have it on the phone, right? Every bank, every financial institution will have a legitimate method of notifying you when they've identified fraudulent activity. Most times, it's a phone call to the number that you gave them. It's your email address. And most times, they're calling you, letting you know what the transaction was, what the last legitimate transaction was, and what this new fraudulent transaction was. For any of you who have used your credit cards outside of your normal geographic area, you may know what I'm talking about when I say this. If you're traveling, if you're on vacation, so let's say take a road trip, you try to use your credit card more than one time, maybe that second time it didn't go through, and the person behind the counter says that, I'm sorry, it's denied, and you don't know why it's denied. And then all of a sudden you get a text from that company, from that bank, right? That's their fraud prevention process kicking in. So make sure that you identify what the fraud prevention process is of each one of your retailers. But in case that your identity does get stolen, there are a couple of things that you should do, these three, immediately. So the first thing to do is to cancel those accounts. So you, gentlemen, ATM machine, call your bank, cancel this card, please. The bank will say, okay, come on in, we'll issue you a new one. Right?
Yeah, I did that.
Right, you do that. The next thing that you should do is you should call the credit reporting agency, one of the three, Experian, TransUnion, or Equifax. The law says that that one that you call has to contact the other two. I like to recommend that you just pick up the phone 3 times and contact them yourself, right? Because you don't know when they're going to do. So you call Experian, you call Equifax, you call TransUnion, you tell them that there was an instance of fraud, stolen identity. They will place a fraud alert on your account for free on your credit report, and it'll be there for 90 days for free. Because what that's going to do is going to prevent the person that stole your credit or your identity from opening up a new credit account with your name on it. Because if I steal your information and you put a fraud alert on your credit report, and I go to Chase and I fill out a credit card application for Chase, they're going to pull your credit report because I'm giving you their information, and they're going to see that there's a fraud alert on your report, and they're not going to give me that card.
Doesn't the other person like just get arrested immediately though?
You hope so, but you know, this is the process, right? The second thing you should do is you need to fill out a police report. Police report, local police report, anywhere. So if you're on vacation and it happens, you go to the closest police department. If you're home, you go to your home police department. You fill out a police report indicating that there was fraud identified, and then you go out to this website for the FTC, the Federal Trade Commission, identity theft affidavit area, and you complete this identity theft report. So those are the 3 things that are going to lock you into a 90-day period of being completely protected. Your credit card company will issue you a new credit card with a new number. Your bank will issue you a new card, a new ATM card with a new number. So you won't have to jump through hoops with each one of those entities if you do these 3 things. They'll all see that. And once that's done, 90-day period, that person that stole your identity will see that they're not going to be able to successfully open another card, and they're going to move on and try to steal somebody else's identity.
So if it's just like redirecting it, is there any kind of not a good idea? It's just let a person who stole one person's identity to be able to steal another person's?
Well, they're always going to want to try to find out the source. Yes, they're always going to want to try to find out the source. Unfortunately, nowadays with hacking, whatnot, it's hard to find the source after one instance. So what they're doing is, what law enforcement and a lot of the companies are doing is just building historical files, historical data to track the hackers, to track the thieves, and then hopefully they tie them together at some point. But it's very difficult to go after that person that stole your ATM card just based on that particular transaction, right? They have to build a pattern. Okay. So now the last 10 minutes we're going to spend just taking a look at what a typical credit report looks like. I mentioned the 3 credit reporting bureaus, TransUnion, Equifax, Experian. They all have like their own little proprietary process, but they're all required to display certain information based on your history and your demographic information, okay? Your score, important note here, your FICO score won't appear on your credit report. They're two different things. Well, they're two different displays. Your score comes from the FICO organization. Each of these three bureaus, since they have their own proprietary way of analyzing your history, they have their own score generated. The FICO score will be the combination of those three scores. So once you get into the habit of accessing your report, and for those of you who have seen your report may have seen this, the TransUnion score might be a little bit different than the Equifax score, which might be a little bit different from the Experian score. The FICO score is a representation that the bank will see. It's the representation that the credit card company will see. Okay? Because remember what I said earlier, behind the scenes there's a lot of activity happening. All those entities that are performing those soft inquiries on a daily basis to give you the marketing advertisements and the offers, they may not be using all of these agencies. Maybe Chase just uses TransUnion, maybe Capital One just uses Equifax, etc. So it's important to know. So some other resources of information, such as Credit Karma and Credit Sesame, those are good resources to get your score. And many credit card companies will now give you your score for free on a monthly or quarterly basis anyway. Okay, but you just know that. So credit history and FICO score, that's what, they're two different items, and the credit bureaus won't give you your FICO score. They're just going to give you their interpretation of your score. Okay. So reviewing your credit report. So here's a sample, and here is the required information that needs to be on each one of those three different credit reporting agencies' information. So your personal identifying information, so your name, address, date of birth, your previous address will be listed there, your employment, your employer information, if you're currently employed, or previous employers will also be listed there, the amount of credit that you're using, a record of payments, see your payment history, so, broken down by year, right, by month, concise payment history. And credit inquiries. So credit inquiries made by you or made by others. So this is the area that is important to verify when you're in the habit of pulling your credit report on a regular basis. Who's making these inquiries? You're looking at a listing, you see maybe 10 individual banks. Maybe you did apply for credit at one of them or two of them, that's how they got there. Maybe those 7 or 8 others were those advertisements that you got in the mail. So they were soft inquiries behind the scenes, but they're required to be listed. Okay? I went over the identity theft. And if you see any errors on any of these items on your credit report, you notify the agency, and the agency will have 30 days to correct the information. Okay? So for that reason alone, I think it's important to pull your credit report on a regular basis. If there's any information there that is incorrect, you won't know that it's incorrect. Right? So you potentially have incorrect information out there. Go out to Capital One site, apply for a new credit card, go out to the PNC site, apply for a new credit card, and you're just leaving it up to them to determine whether they're going to approve you or deny you based on something that could be incorrect. Okay, so it's very important to get into the habit of pulling your credit report. All right. The 3 reporting agencies, the phone number, contact number, and URL is listed here. There's also some booklets up here at the front that we have that have a lot of the information that I went over, important contact information as well. And I don't know, Phyllis, are you going to send the presentation out PDF or yes,
Yeah.
no?
We can do that.
You can do that, okay. All right, so if anybody wants this presentation, you can make sure you sign in, right?
Yes, sign in.
Okay.
Has everyone signed it?
Does anyone have any questions? Anything that I have not addressed that you thought I was going to address?
This is the class of questions. They're gonna ask all of those questions to
You're gonna ask
me
me
on Friday.
You're gonna ask me on Friday, right?
Yeah, I already asked all
In
the
the back.
questions.
All right, so like you said that some banks don't do like Experian and stuff. So on credit card, if you, let's say you're with a credit card that doesn't use Experian, because on my credit card, only Equifax or TransUnion. So is that like an indicator that my company doesn't use Experian?
All right, so it's, you know, again, it's very proprietary, it's based on the actual bank or credit card company, you know, to use one of the three, right? But if you're seeing that two of the three are being utilized on most of your activity, then you could feel confident that most of your activity is being captured properly. The score, though, on those sites, the score is the most important thing, because that's the score that any potential lender will see if you're applying for an extension of credit from that lender. Okay, so the report, it's good to know. So in that case, if I were you, I would definitely go to that third source and pull my report for free to see what's different about the information on those two versus that third one, if there is anything different. There shouldn't be, but those sites, the score is the number one thing. Okay, good question. Yes?
Back to the whole medical bill thing, right?
Yes.
So, let's say you make the payment to the office, but they've already sent it to collections. Are they required to call collections or talk to them and have them remove that? Or do you have to go through the process of?
All right, so yeah, that's a very gray area, right? And unfortunately, it happens a lot. So the question is about the medical billing, and I can tell you right now that over the past couple of years, the biggest discrepancy in credit reporting has been from the medical industry. Discrepancies, you know, come in all shapes and sizes, and the process by which they get on your credit report is based on the reporting cycle of the agency that's being used. The insurance companies have also contributed to a lot of misreporting. So I'll give you an example. You go to the doctor, you have insurance co-pays. You think you're responsible for only 20%. You think 20% equals $300. You pay $300 to the office, but your 20% was maybe $375. So you owe $75. You already paid $300. You owe $75, and their process takes anything that's more than 30 days outstanding and puts it with the collection agency that they're using. Not that in this case, you know, you're 60 or 70 or 80 days late on anything. They just move it from their office to a provider. That provider has no idea what type of insurance payment was made to the office. That provider is just going to bill you for $75. If they're billing you for $75 and you have no idea where it's coming from, and you don't call them, you're not going to pay it, you're going to go 30 days past due, you're going to go 60 days past due. On that 61st day, they'll report it to the credit bureau. Okay? I don't know if that answered your question. I explained the process. I think to answer your question, call the provider. Call the doctor's office, and you just verify the information that they gave you, and the bill was accurate based on what the insurance company told them. Open up the explanation of benefits that you get from your insurance provider. Every time that, if you're using insurance, medical insurance, every time that there's activity on your account, doctor's visit, payment to the doctor from the insurance company's portion, they're required to send you what they call an explanation of benefits. There, it's listed what your responsibility is. If your responsibility, it's not a bill, it's just an explanation. If your responsibility amount differs from the amount that you thought you owed, then you need to contact somebody. because that will wind up on your credit. Did that answer your question? Kind of, sort of? Kind of, sort of? Yeah, and it varies. It varies from, it's based on process. You know, whatever process that office uses. Some medical offices have in-house processes where they just bill in-house and they have all the information, and others don't want to know anything. They use a provider, you call the provider, and then that provider doesn't have the information that you gave at the office initially. So it's very complex. So basically the last 5 or 6 years, just from a perspective of student loan applicants to our company, to Sallie Mae, most of the discrepancies have been medical billing related. All right, so that concludes my presentation. Thank you for coming, and good luck on your path, whatever path you select.
Thank you. Can I? Reevaluation?
Yeah, finish it by Friday.
Oh, no, real quick.
I think I have.
But I opened up the assignments. Then you guys, Friday we'll do filing. And Monday we'll do classes. Probably better to do it Monday.
Jeremy, yours next week, so.
I didn't have breakfast.
And I'm on the verge of.
Did you enjoy the presentation?
Probably not.
Wild stuff, and then you
It was told, it's in the syllabus. It's not me.
Yeah, I like it.
Yeah, and you can see the screen. Yeah, just take a picture. The ones that came out. Okay, great, thank you.
It's working, well, I don't know, it's just not that right.
My pleasure. My pleasure.
No breakfast, okay, I need all the nutrients.
Man, thanks a lot.
Look, I have no money.
We're not gonna see it.
Any opportunity?
Bro, everyone.
Any opportunity?
No, we're gonna do something.
Break it down.
Credit this time, we're gonna do something else next time. Yeah.
Did you have several presentations?
I have a bunch, yeah.
You took all that?
No, right.
More than you know.
Yeah, we talk about this stuff all the time in class. So they were.
Baby steps. Even this?
Yes, I will. And I'm going to walk around, just give me, well, you know what? Can you walk around so I can wrap this up?
Or just point me in the direction.
Sure. We park by the city
By the
back.
science building.
Yeah.
It may take you, right. Remember that, okay?
Where are we now? What building is this?
This is the student development building.
So we're not far, so when you go down the stairs.
All right, take care.
I got it.
You got it? All right, yeah, okay. Great, thank you, great to see you. Yeah, give me a buzz. All right, you lead the way.
Also, just like in a player, I'm usually not like that loud in this class.
No worries. I'm glad you enjoyed it, and thank you for asking questions.
Alright,
This
thanks.
guy's really good.
I think he
I'm
is.
gonna have a few more presentations, so you're gonna see me more.
Okay, you know,
I'll try to have more.
it's always nice to see a familiar face, so.
I remember you from the last presentation.
Oh, okay, yeah, so.
You talked about returning your Pell. Remember that? Your mother had gave you some advice on, I think, what you needed to do with your Pell refund.
I think I asked about something else. It was in this class, right?
Okay.
Something about shoes, I think I was talking about.
I think